All right, so you've been watching Bitcoin lately,
Mm,
and you're probably wondering, like a lot of people, is this the start of another one of those crazy bull runs?
yeah,
Or is this just,
another little jump.
another little jump? Yeah. Well, we're going to deep dive into some data from Glassnode to see if we can get some clues.
They always have.
They do. They always have really interesting data.
I mean, in the crypto world, Glassnode is,
The place to go.
yeah, for sure.
Because they go way beyond just, watching the price of Bitcoin.
Yeah, it's not just the ticker.
Right.
They're really kind of like
Like detectives.
detectives, yeah.
Looking at the blockchain, figuring out what's actually happening.
Yeah, like who's buying, who's selling, what's the real sentiment?
Right. Not just what the price is, but like what's motivating that price. And one of the things that they track that's really interesting is this thing called the MVRV ratio. Have you heard of this before?
Oh, yeah, for sure.
Okay, so for people who haven't, though, explain it.
Well, so think about it this way. Imagine you bought some Bitcoin back in the day.
Right.
Right. The realized value is what you spent. Market value is what you could sell it for right now. This ratio basically tells us, on average, how much profit everyone's sitting on.
Okay. So is it basically like if it's a high number, that means people are feeling really good?
Yeah,
Like maybe too good?
it's a measure of investor sentiment. And, like back in 2017 when Bitcoin first hit that $20,000 mark,
Oh, yeah.
that MVRV ratio, it went above 4,
Which means people were like,
holding Bitcoin worth 4 times what they paid for it.
that's wild.
And historically, that kind of exuberance.
That's when the music stops.
Right.
Things get a little scary.
Yeah, people start thinking about taking profits. It can get a little shaky.
Okay, so what's Glassnode seeing right now that's got everyone's attention?
So they've got this pricing model, right? And Bitcoin just crossed a key threshold. It's called the plus 1.0 standard deviation level.
Okay. Yeah.
Sounds complicated, but
Yeah, break that down for us.
basically they're looking at the historical average of this MVRV ratio. And this level we just hit, it's one standard deviation above that average.
So it's like we're getting into statistically significant territory.
Right. It's like looking at past Bitcoin fevers and being like, okay, at this temperature, things usually break.
Interesting. And I know we've got a chart here. I'm not going to try to describe it for people.
Right.
But basically what it shows, and you can go check this out on Glassnode's website if you want to see it for yourself.
Definitely worth a look.
What it shows is that this level, when we've crossed it in the past, has often, not always, but often signaled that we're near a market peak. Like things are about to turn around. But like with everything in crypto, there are exceptions.
Right.
2021,
Oh, yeah.
that bull run was a monster.
You kind of threw a wrench in the work.
It did, because even though Bitcoin's price stayed above this plus 1.0 standard deviation level for months, it just kept going up. So, like, how do we square those two things? The historical data, which seems to be pretty reliable,
Right.
but then this 2021 thing where it just kind of,
Went out the window.
yeah.
That's where the context is key, right?
Yeah.
2021, you had a ton of new money flowing into crypto.
Yeah.
It wasn't just hype. There was real buying pressure.
Yeah. Like, that was when we saw, like, companies like MicroStrategy,
Oh, yeah.
Tesla buying Bitcoin.
Right. And then all the headlines about it,
Everyone's talking about it.
it was a whole new level of awareness.
It was crazy. So is this time different? Are we in for another one of those prolonged booms where even though the data's flashing a warning sign, things just keep going up? Or are we about to see a correction? I mean, nobody knows for sure, right?
crystal ball.
But this is a signal at least to be cautious.
Right. Yeah.
Like, don't just FOMO in because prices are high.
Exactly. Look beyond the hype,
Mm.
understand the data, and you'll make better decisions, for sure. You know, one thing that really jumps out from this Glassnode report is how they talk about what happened with Bitcoin earlier this year,
Oh, yeah?
back in March.
Yeah. When it went over $90,000.
Yeah, briefly.
For a hot minute, everybody thought we were going to the moon.
Right. Everyone was like, new all-time highs, here we come.
Totally.
But what Glassnode points out is that back then, that was another one of those times when Bitcoin crossed that plus 1.0 standard deviation level.
Interesting.
And then what happened?
Well, it came back down, right?
Exactly.
It peaked and corrected.
Yeah, it was like boom and it,
Oh.
whoa, yeah.
Okay, so are they saying, like, based on that we should be expecting another pullback any day now?
Well, not necessarily. It's really important to remember that these historical trends are just that, trends.
Right.
They don't guarantee anything about the future.
Of course. Yeah.
And in fact, Glassnode actually mentions a very important example
Okay.
that goes against this idea that crossing the plus 1.0 SD level,
Mm-hmm.
always leads to an immediate crash.
I'm guessing you're about to say 2021.
Bingo. 2021 bull run, right?
Yeah.
During that crazy time, Bitcoin didn't just cross this threshold. It stayed above it for months,
They're like way above it.
and prices just kept climbing.
It's like it broke the model.
It did, in a way.
So what was so different about 2021? Why didn't that bull run just fizzle out as soon as Bitcoin hit that danger zone?
Right. That's where really understanding these metrics becomes super important.
Okay.
You got to look deeper. You got to get the bigger picture. In 2021, you had a few things coming together that created a really unique situation.
Like what?
Well, for one, you had this huge influx of institutional money.
Yeah, that's right. Like big players getting into the game.
Exactly.
Yeah.
Like you had companies like MicroStrategy, Tesla,
Right.
adding Bitcoin to their balance sheets. Hedge funds started getting in on the action. Even traditional banks were starting to offer crypto services.
It's like crypto finally went mainstream.
Yeah. It brought this whole new level of legitimacy to the market.
I remember, like, it was everywhere. Every magazine, every financial news channel was talking about Bitcoin.
Right. And that kind of went hand in hand with this other big thing that was happening. More and more, everyday people were getting interested in crypto.
It was like the pandemic almost, like, accelerated that.
It's true. People were stuck at home. Some
Yeah.
had extra cash from those stimulus checks,
Right.
and they were looking for opportunities.
Yeah, and crypto, with all the buzz about it, seemed like the place to be.
Totally. The whole idea of it being decentralized, disruptive, potential for big returns.
It was like a perfect storm.
It was.
This narrative of Bitcoin as digital gold,
Yeah.
a hedge against inflation,
Yeah.
and all this new money pouring in, pushing the prices higher and higher. It just fed this frenzy.
Exactly.
All that FOMO, all that excitement.
It was wild. And that's why just looking at one metric, like the MVRV ratio,
Right.
while helpful, doesn't always give you the full picture.
Right.
You got to understand the context.
All the bigger picture.
Yeah. What are the stories?
Yeah.
What's really driving the market?
Okay, so bringing it back to right now,
Yeah.
we're seeing Bitcoin cross this key level again.
Uh-huh.
Are we going to see a repeat of 2021? Or is this time different? Are we headed for a big disappointment?
That, my friend, is the million-dollar question.
Right.
If I had that crystal ball.
Yeah, you'd be on a beach somewhere.
Exactly.
Hmm.
But look, there's got to be some clues we can look for, right?
Yeah.
Some signals that might give us a hint.
Give me the insights. What else should we be paying attention to?
All right, so here's where things get really interesting.
Okay.
We've talked about how the MVRV ratio can be a sign of an overheated market,
Right, a warning sign.
but it's not a guarantee.
Right.
So we got to look at some other factors to get a better sense of where things might be headed.
Okay, I'm all ears. Lay it on me.
Okay.
Okay, so we've spent a lot of time talking about this MVRV ratio and how it's kind of like a canary in the coal mine for Bitcoin, flashing this warning sign like, hey, things might be getting a little too hot in the market.
Yeah, and I think it's really important to keep in mind why this ratio matters.
Right.
It's not just some arbitrary number.
Right.
It actually gives us insight into something pretty crucial.
Mm-hmm.
How much potential there is for profit-taking in the market.
Okay, explain that.
So think about it from the perspective of someone who's holding Bitcoin right now. They've seen the price go up. They're probably feeling pretty good about their investment.
They're in good brain.
Exactly. But then they see this Glassnode chart, and they see this MVRV ratio climbing higher and higher. It might make them start to think, maybe it's time to cash in some of these profits before things turn around.
Especially if they start to get a little nervous about the market being overheated.
Right, exactly. So even if we're not necessarily at the peak of this bull run just yet, this data suggests that things could get a little shaky in the short term.
Okay, so let's say you're in that position.
Yeah.
You're holding some Bitcoin, you've seen these nice gains,
Yeah.
and then you see this Glassnode data, you hear us talking about it on this deep dive. What do? Do you hold? Do you sell? Do you maybe even buy more?
Well, that's the question every investor has to wrestle with, right?
Yeah,
And there's no easy answer, no one-size-fits-all solution.
of course, yeah.
It really depends on your individual circumstances, your risk tolerance, your investment goals.
Right.
Like, how much risk are you comfortable taking on in the market right now? Do you truly believe in the long-term potential of Bitcoin? Even if there might be a dip in the short term.
It's easy to get caught up in the hype, right? Especially when you see prices going up and everyone around you is talking about how much money they're making.
Oh, absolutely. It's like FOMO on steroids.
Yeah, exactly. And that's where having data like this from Glassnode can be so valuable. It lets you kind of step back from that frenzy and make a more informed, calculated decision.
For sure. It helps you ground yourself, look at the bigger picture.
Absolutely. And I think it's important to remember, too, even with the best data, even with the most sophisticated analysis,
Yeah.
nobody can predict the future with 100% certainty.
No crystal ball, unfortunately.
Right. And that's part of what makes investing so interesting, right? It's about dealing with uncertainty, making calculated decisions, and being prepared for whatever might come next.
That's it. It's a game of probabilities, not certainties.
Well said. We hope this deep dive into Glassnode's data has given you some things to think about as you navigate the exciting, sometimes crazy world of Bitcoin. Keep exploring, keep learning, and as always, stay curious.
Absolutely.